Ladies and gentlemen, welcome back to FinTech Decoded with Monica and Mushir. As always, we're trying to bring to you a decoding of major themes and concepts in FinTech. Today, we're delighted to have Mr. Mahesh, the CEO of Sahamati, with us to discuss about open finance and about account aggregation, looking at how that's grown in India, but also looking at how things have developed globally and what are the major implications and utilities of open finance. Welcome, Mahesh. Thank you so much for joining us today on FinTech Decoded.
So thank you, Mushir, and thank you, Monica. It's a pleasure actually to be on the podcast. So it's been a while, since I recorded one. Okay, so I think it'll be interesting.
We are looking forward to and very keen to hear your thoughts on the topic. Right at the top, maybe this is just for our audience, for all of us, I guess. Is I'm going to have a go at what I define open finances and compare,
Sure.
and each of, because it kind of feels like a lot of people have slightly different ways of how they look at account aggregation, open finance. The analogy I try to give quite often with broadly open finance, especially in banking and otherwise, is the comparison when it comes to going to a multi-branded store, right, for buying shoes. In some senses, where you want to go, you have a store where you may have Nike, Puma, Adidas, Reebok, On, whatever you want to call it, multiple shoes at the same store, and people are comparing, while you have your own showroom right next door, right? And people often are wondering why are brands willing to quote unquote dilute their brands. But I feel like it's a similar conversation where you are having an opportunity to list your product in multiple use cases, and in one space, in the your showroom are where more dedicated hardcore customers come in because they know what they want, whereas you then have an opportunity where people can compare and the undecided user, as it were, or the customer. That's somehow I look at in a similar way when it comes to open finance. You kind of now have an opportunity where different financial services providers can come or be offered at the same spot or platform on one side, while they all function in their own silos with their own segregated customers on the other. So that's my take. Either of you feel free to go next. Yeah, Maheshji. Yeah.
So what I would actually say is that the example you gave is actually right in a way that in India, what we call as an FIU, a financial information user who wants to provide a financial service / product, to their customer.
Correct.
But what is the basic information would any service provider want? Is the data. I mean, I'm saying in any field, like actually that, right? In any field. Now, with open finance, what happens is the owner of the data, or the customer of this FIU, what we call in India, so the data principal, the one who owns the data, is having more control on all their financial data. You all have heard a lot about open banking. India has leapfrogged from open banking directly to open finance because the user is able to selectively share not only their banking data, okay, but their investment data or the capital markets or their insurance data, their pension fund data, and now in India, including the taxation data, which they have started with the GST. So I can decide which data, what I want to share with this FIU, okay, where I am seeking a service. Now, the actual issue we have today, which you would agree, is that we have the information all in silos. It's all in silos. It's, you have it in a bank, you have it in actually capital market, insurance. And to access our own information, it is a little complicated. Okay, it's a little complicated because, you have to, log in, download the data, as a PDF, then email it to the one from whom you want to loan insurance. So what happens is there's a lot of drop-offs because you start with a lot of, think that, okay, I'll apply for a loan or something. And as and when they ask for, give me one more document, you give up.
Yeah.
Okay, so there is a lot of drop-offs, a lot of friction for the one who's seeking the service, who's providing the service.
Correct.
With open finance in India, like, which has been known as the account aggregator ecosystem, a framework which is from the Reserve Bank of India and all the regulators, but RBI is in the driving seat. An end user is able to have access to their data and give a consent and make it available, okay, to the financial information user. This is very powerful, very powerful, and it's very, very different from anywhere else in the world. In India, what we say we have, you would have heard of what we have, the account aggregator, which is is actually a consent manager. I give the consent that what data, for what period of time somebody can make use of it, and for what purpose. It's very, very granular. Okay, so it is the end customer who is in full control of their data. And I would say nowhere else in the world it has been made so granular.
Fair. Monica, how are you looking at open finance?
I will have to actually take a very different view on this. The best part about my vision of how this is developed is from the time where data, now we consider it the new oil. But I'm looking at it from a perspective where PayPal disrupted the world by disintermediating payment instruments, by actually coming in the middle. And thereby, a stored value wallet had much more data about what users were doing than the mainstream instruments that were used to top up that particular stored value wallet. Now that I read what has happened in the US, and this is such great timing that we're speaking to Mr. Mahesh today, where CFPB has included payment apps and data brokers in its final rule of 1033, which came out last week. Essentially, what it is doing is to provide personal finance data rights and to ensure that open banking has and will take shape in the United States, what has already happened in most parts of the developed and the underdeveloped world. So why it's striking for me is because when we talk about data and where it is stored and how much, why financial services providers need this data, how they store this data, we never talk about the consumers. We never think about the businesses that need to act on consumer data in order to be able to enable financial services. We almost never talk about financial inclusion, and we also never talk about the consent to give the data and therefore to take back that consent as required. We almost never also talk about financial inclusion, which is the main reason why open banking, then open finance, and now open data has become the major talk of the town for most countries and central bank regulators. Now, Mr. Mahesh talked about how this is happening in India through the aggregator framework that has been owned by the RBI. And of course, it is being implemented with, I think, close to, if I'm not mistaken, in August, 100 million consents that were provided. The question for me, however, is with open finance that what are some of the use cases that it will enable? And when these use cases get enabled, how will consumers who really need financial services products that we so want to get to them be able to access it in a manner which is both cheap, transparent, but at the same time does not misuse the financial information based on which they can be denied service. So these are some of the fundamental layers that I'm coming with, simply because I've seen the evolution where the networks, the card networks didn't have access to data until the time today when most of the digital wallets actually have much more data about consumers, including in India, if you think about it, with UPI becoming mainstream and becoming a part of our everyday lives. How many of us are able to think beyond the transacting apps and how much of the banks do they understand about consumer behavior and habits other than what we are seeing? So this requires the ability of what Mr. Mahesh has introduced to us, and of course open banking all across the world, but to kind of transgress into a layer which goes beyond payments. For me, this is the most interesting part, and I'm interested in going beyond payment use cases into others. And I know we will be talking about that a little bit later. But for me, this evolution that has happened, especially in the last 10 years, has been extremely fascinating.
Yeah, it's almost that unique conversation, right? Where on one hand, as Mr. Mahesh mentioned, you now had that element of, okay, I'm applying for a loan, or I'm applying, even forget applying for I'm applying for a bank account, right? I'm opening a new bank account. There are these 10 different documents that are needed. 15 years ago, even 10 years ago, to a large extent, was paper-based, was submitted in a branch and, validation, etc. And then it became, okay, submitted online. And there's all these challenges about formatting, whether it's valid or not, all these kind of elements come in. That's on one hand. So you then had Open Finance kind of helping, say, okay, you can bring in this data. But I feel the one key element that Open Finance broadly and open banking has brought in is an element of bringing in a layer of trust or verification, right? Because you, instead of now needing the customer to validate that the information that they're providing, which 95% of the time probably, and I'm just making up a number, but majority of the time you would imagine is accurate or is true, let's put it that way, versus being impersonated, is now the burden is like, okay, you have a trusted entity which is licensed, it's all of it, even not even looking at blockchain, just generally is now validated. So you now have that data. So one piece is your data layer. So validation of data for taking financial decisions based on existing data. The second data, I think, is also, would love both how both of you are looking at it. And this is something I'm seeing happening more or more focus on, especially in places like in Hong Kong, from a use case perspective, is transactional data. So you had the static data, in particular, your KYC elements, etc., which is static or at a certain point, versus dynamic transactional data, which kind of gives you a lot more insights when there are decisions to be made on lending in particular or in investment, etc. Right? So now you have the second element, which opens up the taps for multiple people to be able to take that decision much faster based on data that may be much more harder to generate 5-10 years ago, because you couldn't get the granularity that Mr. Mahesh was also mentioning about.
So I would, also say that it is also about the trust which the provider has when he's receiving the data, through this framework, because all the financial information which comes is directly from your bank. Okay, it is not from the borrower, but from the bank to the loan provider or insurance thing. It goes directly, and it is in machine readable format. So now you are giving a PDF or a hard copy which you scan and extract, and the format from entity to entity may not be the same.
Right.
From bank to bank, insurance to insurance. And that is exactly what happens in a DPI, is the standardization. Standardization removes a lot of friction, the cost of processing, everything goes actually down. And they in our AA framework, there is a zero chance of tampering the data, because it goes from entity to entity and it has the digital signature. So that, you see, it is a complete win-win situation. What you see in AA, and as even she told about the examples, the use cases. The one which we need to focus on is the sachet-based financial products, which becomes now a reality. In India, the most famous one is, very few could afford this entire shampoo bottle, but after that, the 1 rupee, so sachet came, the sales went up. So the majority of India, most of India, want a small size loan, a small ticket size loan, sorry, a loan for a short duration, which obviously, if you go by the old ways, obviously for any lender, it won't work out. The ROI, to process all the papers, this one, that one, for a 5,000 rupee. In fact, I'm saying even for a 1,000 rupee, loan, which in our opinion, which is our ambition, which is our goal of Sahamati, to make that part a reality. To give one example, from what we have heard, like over here, the interest rate what a street vendor pays in India on a daily loan is anywhere from 2 to 10% for every day. So can we change it? Yes. In our opinion, we are very, very confident we will be able to change it.
And where is this? Go on, Monica.
No, go ahead.
I would say, go ahead.
I was going to say that Mahesh brought up such an interesting concept on the factorization of the Indian economy, at least in terms of FMCG, and to help spur the demand for products. What has become really interesting is that especially after the funding winter hit, everybody has been saying and asking the value of what fintech and others have done in the market to be able to really help and go beyond the top of the pyramid. Now, with this strategization in terms of the play being available as a use case, I can't even think about the opportunity size of what this could impact, because it is not just buying insurance or buying a particular financial product for a particular use case. It's about the price point and when you need it only for that time period. Now, this may be a concept that might be foreign to a lot of countries, but because of the Indian consumption patterns, this is probably the best mirror of being able to build for India in terms of how India wants it and not in terms of how the world sees how products should be built out, including in financial services where you typically have tenures and periods which are long term. We are probably going to see for the first time this being cut short into what is called saturation. And I think that this will be one use case that nobody in the world would have seen. It will definitely not only emerge from India, but it will be probably the biggest use case in across the financial spectrum.
And we have the volumes.
Exactly.
So here's a thought on that, right? We often look at India as almost this bellwether for the global south, emerging economies, whatever we want to call it, largely for three reasons in my view. One being, as you both have mentioned, the large population and the size, so you could do large volumes. Second is we are coming off lower income base as such, and that's been happening. And number three, to a certain extent, the representativeness from a demographic perspective, which is fairly young, 30-ish at scale. So when we look at these three factors, India is not necessarily that unique besides the volume question, right? The other two we have seen. And even on the volume, you have places like Nigeria, which are, have 250 million people. Indonesia has 200 million people. Our neighbors, both Pakistan and Bangladesh, are talking about, which is really sizable volumes for emerging markets, right? So what has been the conduit driver? A lot of times it is the conversation around DPI, right? The digital public infrastructure. So the three layers, one being your data, your biometric layer, then you're having your infrastructure layer, and then the data layer, broadly speaking. And we've done it at scale. We've done it at cost effectiveness. Why? So my question here is, can we see this being replicated in other ecosystems that you have noticed, Mahesh in particular? And how much of a part does the government plus the regulators play? In this case, this is an RBI-driven project where they have brought this in to enable financial inclusion, broadly supported by the government as well. And then you have the conduit through Sahamati to kind of deliver it out, right? So how have you seen that grow? And you've been in the industry for a long time and you understand how this, so what do you think, what was that light switch moment for our regulators, our ecosystem to kind of say, this is needed now to be driven at a government TI level versus what we've seen as the China model, and I would also say the Western model, which is the private enterprise model, which has driven a lot of innovation. Even in the US, there's been very little government interference, not government initiative when it comes to digital public infrastructure for finance. So
I would say that, India is an excellent example where it is a partnership, between the government and the market. See, the actual the framework and the technical schemas, what we call specifications, is from the regulator, and from what I know, it is also the entities were involved in finalizing. I mean, it's not like everything is done actually in silos. It is actually a collective actually thing. But once you have the framework in India, it is always left to the market participants to implement it and work on the innovation. So the innovation is key, but inside the guardrails. Okay. And I would say when it comes to any data, let me tell you, especially which has the PII, okay, financial data, we have to be careful. Okay. And you have to have guardrails. And you will see that, when you speak a lot actually with the banks, I'm saying all banks, I mean, whether small or large and all, and including public sector banks, you will see that how much they think about the end customer safety. Just because it is, a cutting edge, bleeding edge, it's not that it will be rolled out, right? I mean, they go through a lot of thinking. What should be the guardrail? Should it be increased? And, all of that. So, in my opinion, the way we have it in India is good. Okay. And in India also, like even UPI is not mandatory for like any bank. But the customer has made it for the bank. It is mandatory. Otherwise, they will move. So the account aggregator also today, it isn't mandatory for any entity to implement it. But I would say all I would again like to repeat, every entity, irrespective of the size, is important. But in India, if you see for 2 years and all the 12 public sector banks and all the top private banks have implemented this important framework. So that's a very big thing. And as I was saying, a while ago to you all, like, we have like about 2.2 billion accounts, financial accounts in India, which have the facility of account aggregator. It's up to the owner of the account whether they want to use it or not, but they have the facility. So very easily, it is the largest open finance ecosystem in the world today. And the DPI, I mean, I think you asked about why it is important or so. I mean, in India has obviously shown, with Aadhaar and UPI, it has brought in a huge difference. Okay. And it's not only in India, I think the other actually countries also have seen how we have implemented and what impact it has caused. Now, if you look at UPI, the number of actually bank accounts which might have been dormant or hardly used today, it has become so hyperactive, to be precise, instead of telling active. It is become very active. So you have these digital footprints now. Okay, based on which, I know I'm actually jumping, but since I came to the topic, I just wanted to tell you, because we have this digital footprints, and India has so much that we are now seeing that how India, from being a data rich country, how can it become economically rich? Okay, because we have this footprints now. Using account aggregator, you're able to share your footprints, and there are financial institutions which want to analyze these footprints or the cash flow, the transactions, what you're talking about in a bank statement or in your capital market, and decide whether you qualify for a particular service or not. Okay, so this entire DPI thing, it removes the friction, it standardizes things.
Yeah.
It really standardizes. See, this standardization is little, I think people have not given enough importance to it, but it really solves a lot of problems.
Mahesh, would it be okay if we can talk through the DPI and the Indian story from your perspective? to help kind of almost demystify some of the terms. We said account aggregator, there's Sahamati, the regulator, and then of course there is the entire framework that now banks are using. Just because the foreign side and specifically for any other country outside India probably does not have as much involvement by the regulator as we do. So we'd love to be able to give that download to our listeners.
So I think I'll focus on the open finance DPI in India, if that's what you meant to say.
Yeah.
So in the year 2016, the regulator, the RBI came out with the master directions of the account aggregator framework, in which the other three regulators for capital market, SEBI, the insurance, which is IRDA, for pension fund, which is PFRDA, were all involved in this entire framework. Hence, it is called open finance. If it was only the banking, it would have been open banking. But because it has gone across all, it has become. So the framework was published in the year 2016. And as the term we use often is, it is truly cross-sectoral, right? Because it is banking, capital market, insurance, and pension fund. So in the year of 2019, by then, I should say that in India, these account aggregators, which are these consent managers, are licensed entities, from the Reserve Bank of India. You must get an NBFC AA license to be an account aggregator in India. So in 2019, I think we already had about 2 account aggregators were already there, but it was yet to take off. So these account aggregators and a few banks had requested a entity to be formed, what we call a Section 8, or which is more popularly or so generally known as not-for-profit entity, which should be formed, to bring all the players under one umbrella, by which they are able to easily communicate and get this ecosystem up and running. Now, if you are working under one regulator, I think you will be able to figure out how to speak to your competitor, or another one insurance knows how to talk to another insurance for something. But now you're going across the sectors, and the way the framework, the master guidelines were written, is any entity which is registered and regulated under any of these 4 regulators can automatically participate or implement this account aggregator framework. So you don't need another license. You don't have to get a permission. I think it was well thought of. So automatically, if you're interested, you can join the party. If you're not interested, you can stay in the sideline. So the number of entities which actually qualify to participate in this ecosystem is about 10,000. So how do they communicate with each other? And, there will be communication. Like if they have a doubt, if they have a problem with the data quality, they're not able to get a statement, and any of that, how will an insurance company actually speak to a bank? Who will actually, clear the doubts of the technical specs on an everyday basis? There was a need for having some common technical services which the ecosystem had to use. So there were many questions. And in the initial years, the first 2 years, you would agree that because this entire concept is new, a lot of advocacy has to be done, right? You need to go and tell an entity you have to join this bandwagon, why it will help you, why you do not have to be worried that you are sharing your customer data, what you have to gain by joining. So yes, for the first 6 months, 1 year, everybody was worried, if I join this ecosystem, my customers' data will be shared. So we had to, show about we had to speak about the use cases which would go on steroids if they use the account aggregator framework, and how each entity would gain And also there's a very, very untapped, a huge untapped market in India. Okay, now if you look at the very important segment in any part of the world is the small businesses, MSME sector. The credit gap itself for MSME sector in India is about 27 lakh crores every year. The gap, how will you fill it? It has to be technologically. It can't be done manually, right? Because if you need to scale that to implement and you have to penetrate, to the population scale, you need a technical scalable solution. That's where you have a DPI. Okay, because again, it is standardized across each of the world. Like all bank statements the structure is the same. All insurance policies will look the same. It makes your life easy for the provider. I mean, the service provider. They know what information is about to come. Now they have to scan it. They have to normalize it. Okay, they have to look into fraud, everything. Now all that is taken care here in a single shot. And all the data which comes is in machine readable format. So as I speak to my customer, the information would have actually gone to the backend systems, and I will know instantly whether that loan will approve or not. Yes, there is paperwork, but a borrower and the lender want to know whether that loan will actually go through. As we say, the turnaround time with DPIs, I mean, it could be open finance, it could be payments, it could be identity, it shrinks exponentially. Okay, to give an example, a large private bank actually conducted a pilot to use account aggregator to give a car loan in a showroom. They were able to do end-to-end, including the disbursement of the money in 30 minutes. Okay, so that immediately shrinks the time. It used to be 3 days.
Or even
So it helps, it's indirectly, which people don't talk about. It has an impact on the economy. So money is flowing now.
And it's that whole of time is money, right? And that's the standardization is so underrated, spoken about.
Very underrated.
In financial
I'll give you one real example, which everybody could be, I mean, maybe it's only me. Like if you use the various, OTT channels.
Yeah.
Okay. Now, if you see that like when you pause or when you start, I mean, you have your entire bar, right? Yeah. In few channels, it shows you how much time is left for you to actually complete the movie. In few, it is actually static. You see how much you have seen and how much is the whole movie. So you need to be good at your actually math to quickly subtract and figure out, like how much more you need to see.
Like watching cricket matches again and trying to figure out the run rate, but yeah.
Okay, the way things are going, I don't think we are keen to watch those matches. But and also the forwarding, how you forward, the 1x, 3x, it is not standardized. Okay, so it has an impact. So standardization is very, very key in any product, especially I think in all worlds, but surely in the digital world.
And a crude example of that, of why standardization is important, is what's happened with our mobile chargers, right? In terms of Type-C.
Especially in Europe now, it's a thing. I think it should be Type-C.
That law, but yeah, that just makes it. There's the environmental benefits. There's the user benefit. It's all standardization. So everybody, yes, wasting less, but it's costing less. Because then every time I get a new phone, at least previously when I get a new phone, that means a new charger, right, and a new cable. Which now it was USB-C, USB-B, and now it's now all standardized USB-C, and everybody has the same. Doesn't matter what
manufacturing
and manufacturer using, and from next year onwards or the following year, and end to end will be the same. You don't even have the plug-in to the mobile differently. Coming back to this, and one of the things I keep liking to talk about from open finance, open banking, is we've spoken about standardization, big thing. The other element which you touched upon, which is very true, is the distinction that in play between using open finance as a driver for financial inclusion / benefit for businesses, largely typically small businesses, versus the use of open finance and as an extension, open banking, lending, etc., for the end customers, right? And I think
For the individual.
for the end individuals, right? So
Okay.
yeah, so when I say, I mean consumers, and I feel we've a lot of drive in India has been firstly driven through that individual use cases to a certain extent. Whereas when you look at other economies and use cases, Hong Kong CDI, where commercial data interface, which is being built to support the open finance framework, the FCA's open finance framework, which is among the first in the world from a regulatory perspective, and Australia similarly, was driven towards SME inclusion, right? Whereas we went with a consumer inclusion. What are your thoughts on it? I feel the consumer, it was a very interesting point you mentioned about that 500 million Jan Dhan accounts that we talk a lot about from a financial inclusion, but there is the dormancy of it versus the actual use of it, which you're talking about being accelerated. It's just down to now people know how to use it. They've had 5 years, 6 years of owning an account, have understanding of using mobile phones, and saying, okay, now I can use this on my own. I don't, which they never had, right? Their understanding. So in a similar way for businesses, what are your thoughts in terms of where they are in India when it comes to use open finance or the utility thereof?
See, like at least in India, you don't have anything different. I mean, you don't differentiate between an individual account, a proprietary account, and actually corporate account. Yeah. Where the differentiation comes is who can give the consent, who has the authority. Okay, like example, joint account, etc. So today, only singly held accounts have gone live. So that is an individual, the singly held retail, and a proprietary account have gone live. So, okay, sorry, on AA.
On AA, yeah.
The reason why corporate accounts have not gone and the joint accounts have not gone live on AA, which we expect it will be solved in about a quarter or so. I mean, if everybody agrees with the method, is how will the consent be given? If it is a joint account, should the primary one only actually give the consent, or the secondary holder can give, or they both have to give? So one has to, again, I told you, every entity will worry about the data privacy, the guardrails, which the work has started. So, but close to 80 to 85% of the accounts in few banks, I would say, okay, 90% accounts when we had a survey done are singly held accounts. I mean, I really thought that there'll be a lot more of joint accounts, which includes either or survivor. But it looks like most of the accounts are singly held accounts. So you can say that most accounts are there on AA, but I would agree with you that the corporates with whom we speak are very, very eager, okay, to use open finance in India. There are, several reasons. See, one use case, is actually PFM, your personal finance management apps. What that allows for the individual is that it generates that individual's balance sheet. We speak about the corporate balance sheet.
Yeah.
But an individual also has a balance sheet.
Correct.
Which I would say each of us actually don't know what it looks like. Okay, because using a PFM app, it is able to, draw it in, real time. And the important feature of a PFM, which I inform like every PFM provider, is that not that it should have only the reports it should show actionable reports. It needs to talk to me. It needs to tell me that you're spending, a little more on this. Okay, or you have some, you have extra cash in your account more than what you spend. You should have an FD, you should invest or something. So actionable reports become important. But then until now, the PFMs were mainly spoken for the individuals. Okay, then we heard that the MSMEs are extremely keen to have a PFM which is tailored for for them. Then we have heard even from corporates, we also want, because what they want compared to an individual is very different. So we have use cases who will change, whose color or the size and shape will change, okay, based on the end user. So these apps will become very important for the corporates, etc., which you will see. And I do expect in the coming months, I mean, I said a quarter, I don't know if it's a quarter, but in the coming months, we do know that the government and the ecosystem, so regulators, the market participants are very, very keen, okay, to see this problem is solved for.
And as we build towards it, one of the elements I feel we are working towards, and not just it's Sahamati is consensus, isn't it? For people who don't
Yes.
get the word right.
So yeah, because I think I mean I actually didn't go fully into what Sahamati does.
Yeah.
Okay, Sahamati was formed because to ensure that the market participants were able to speak with each other, and we also brought in the technology service providers who can work with all the participants. And when we had to name the company, I mean, we had to think, and obviously, account aggregator is about consent,
Yeah.
and Sahamati in Sanskrit and many languages is actually consent, and it was actually done. And our motto is what we need to work for the end user. End user should be served properly. Yeah, all this, the services being offered, the amount of data which is being pulled, as we call it, should be fair. The fair use of this important DPI is important, and we work on all of this through what we call the participatory governance. It is not we who do, the team which is very small, but we form the working groups, the councils, which is formed of the participant of these, the banks, insurance, account aggregators, etc. And they come up with the consensus of the fair use rules or something, that this is in our interest and in the interest of the consumer.
Often, the lot of conversation goes in towards data, and every time there is data, there is a conversation around security. And a lot of people don't understand how things work, and there's always trying to find who is at the source of it. You mentioned about how this is company to company, there's digital verification. So validation, trust done, right? From a data authenticity.
So it's encrypted. Actually, when it flows from end to end, it's encrypted. Only there. So receiver is able to decrypt. So the account aggregator is not able to decrypt. And the beauty of this ecosystem is no account aggregator is not collecting the data. They don't store the data. They're actually a postman. They only deliver the data. Even though the name is account aggregator, it actually collects the data based on your consent, and it hands it over to the service provider, and it deletes the data. And they cannot see the data because it's encrypted.
Yeah. It's a bit like phones, no? When you're doing a WhatsApp encrypted call.
Yes. Yeah, it goes correct.
The network is Sahamati in some
sense,
right? Yeah. Monika, thoughts?
I would actually love to deep dive on one particular question that worries me a little bit, which is about financial education. This is something which has come up, and it's the talk around the town. Let's be honest, but that's because of all the rich people in privileged class talking about how they have been misinfluenced into investing and the usual stuff. The question is, when it comes to data and security, even the best of us do not know how to secure our data. So when it comes to sharing data and therefore either providing consent or removing consent, I would love to deep dive on how this would actually work, because now with regulators becoming extremely active on the data sharing and therefore protection, and all across the world, we are seeing this movement where consumers are requested to share their data only with entities that they actually trust. We talked about trust in the ecosystem. How should financial education be provided to consumers who necessarily may not have the means and the wherewithal, And we talked about the staturized economy. We talked about MSMEs. These are the ones who are daily living, providing and living for every day. Question is, what are we going to do for them, and how does the account aggregator or similar such framework in open finance helping the consumers and small businesses understand when it's safe versus when it's not safe?
See, luckily in India, I would say as of now, I mean, things can change that the ones who can participate in AA framework are only regulated entities. Okay, so the unregulated entities are not able to participate. So already these financial institutions under their own regulator, they surely have obligations on all the things you spoke about, the data privacy, this and all of that. And now with the DPDP law in India, actually the bar actually goes up far, far higher. But definitely one has to plan, which we all are thinking on, social engineering. Social engineering is where many people very easily give away things.
Yeah.
And as you said, the most educated are the ones also who fall into trap. You may have some fancy degree and or a fancy designation, and when we read in the newspaper that they lost huge amounts, and you get worried that hopefully it's not you who'll be the next victim. So I mean, now any call we get, if they ask anything about financial, I simply cut it, because I know I'm not expecting any call. And I mean, sometimes I think it's actually a genuine call, and I'm actually cutting it. But a lot of customer education awareness, I mean, that's a continuous process. It's not that we have a campaign for a year and it's done, because all those folks, the scammers, are few steps actually ahead of you. Okay, they are very, very creative, very, very intelligent. Okay, but it's used for the wrong purpose. Okay, because you have the issue about the accounts, the mule accounts are there, which are being used for all sorts of things.
Yeah.
So with various DPIs and with the information available, I hope the innovators will come up with the early warning signals, or warning the end user, hey, the one who's asking for the data, I'm not whether it could be an unregulated in actually some other country or something, asking for data, that you have to actually watch out because the track record is bad or something. So that's where I feel the consent managers, which have been decoupled in this flow, they're not part of any entity. It's its own entity, and they represent the consumer. I feel they can add those value added services. Because if it is a loan and the amount of the data being asked is more than usual, right? It can warn the user that, okay, the amount of the data you're going to share is more than usual. If you're fine with it, you can, but I just want to tell you. So I think a lot of dialogue from the digital to the consumer. Also, it has to happen in Indian languages through voice and video. See, in account aggregator, in any of the consent managers, I mean, if you give, lot of the fields you're applying for a loan, okay, the statement you are going to share is for 6 months, etc., etc. But many may not understand it. Okay, that entire consent. So it should be voicified. It should be in a visual form. Okay, to explain, it should speak to me that, okay, this is what they're asking. Are you okay? So when those kind of extra, the layers, that communication channels are introduced, which you will see, it will happen soon. And even, okay, it would just let our hackathon has already started, and many are introducing a few of the things what I spoke about. And you will see that the user will be in safer hands, but it is a continuous process, as I said. Okay, you have to keep on actually educating actually the user, especially about this is social engineering.
I completely agree. I think financial education is not something which has an end date, and it's not something that can ever be enough, because there will always be these more intelligent people who create these use cases based on which they can continue to scam and keep innovating at a rate which is faster than most regulators as well as the industry combined. And we've all been victim of that. So all of us know that. But what would be very interesting is how it pans out in India, specifically for this large population base, and therefore the responsibility which lies with all the participants of the ecosystem to cater to this use case and therefore build security on top of every application, at least in a manner which is understandable for consumers and businesses. Absolutely agree with you.
Yeah, I think we have Sahamati on that from the consensus that we do need better financial education as more people get moved from physical, real, in-person finance to moving to digital finance. And it's as a whole, the piece has to come together, and hopefully that can build up. This has been a very fascinating conversation. We've touched on a lot of points, and I think we can go on for a couple of hours more easily talking about it. Topics like these aren't necessarily as easy to decode in an hour, but require multiple takes at it. So, but I want to really take an opportunity from both on behalf of Monica ji and myself to thank you, Mahesh ji, for coming on board, giving our listeners an insight into Sahamati and how open finance is democratizing and changing things. Right? We often don't talk about. We look at these things, we don't pay attention to how this is actually having that impact on the ground, right? And that's a very important element of how user behavior is changing, but enablement also is rapidly accelerating as the user behavior changes, leveraging of infrastructure, which has probably been around for a decade, but is now being utilized to its hilt at scale. And often we would talk about how in China, Alipay and WeChat Pay were processing 1 billion users without anybody hearing of any failures. I think it's a similar story now with India and the scale and volume, that the technical architecture infrastructure is able to do this, churn it out on a consistent basis, and you don't realize because you don't hear of it, you don't value it as much, but that actually is a pretty big value. Touchwood, nothing breaks down when we have the session afterwards. But long story short, I think it's been something that's very fascinating to hear, and congratulations to your team and more power to get
Thank
more
you very much
from the others as you build towards adding more things to the platform.
And also, I want to take this opportunity to inform you both and your listeners. On the 19th of November, we are holding our event on open finance in India. Nice. So it's actually called Samvad, which is actually conversation. So any of you, your listeners, who are interested to really look into the real use cases, which will be presented by the ecosystem, not by Sahamati. We don't get onto the stage. Everything is run by the ecosystem, the participants. You will see several use cases which will be demoed. Okay, and if few of the like actually panels which will compare or speak about the Indian open finance and the global open finance, and we'll be releasing few reports like what is the impact of AA, maybe actually on the economy or on the jobs, also on the adoption of open finance across the world. All these reports will be actually launched in our event. So I invite each of you to register for Samvad, which is a free event, and it'll be great, for them to come, for them to learn, and for us to learn from each of them. So definitely, thank you. It was great.
We'll include that in our comments as well as in the
details. Okay, thank you. Okay.
Thanks again.
Thank you.